Stocks versus real estate investing, what a fun debate. There are a lot of people that are all about the stock market, and there are a lot of people like me who are all about real estate investing. If you watch this channel at all, you're going to know that I am all in on real estate investing. But most importantly, which one makes more money? Let's have a fun little debate today. But today, I want this video to be about you. I want you to watch this video, and maybe this will provide a little bit of a different perspective, because I figured I could bore you with a bunch of charts just showing which one returns 11% versus 8%, which one makes more money. However, in life, it is so vast and nuanced that it is not all about just one specific number. So when you watch this video, I want you to try to apply it to your life. What I'm going to do is actually have a fun little exercise. I'm going to show you how I would apply this argument to my life, and hopefully throughout it, maybe you'll learn a few things. So we're going to start in September of 2016. That is when I first started with real estate investing, and I started with about $25,000. So that'll be our starting cash amount for either one. $25,000. That's when I bought my condo. And what I decided to do is I looked at the S&P 500 dividends reinvested calculator for 40 years. Now, the reason why I use 40 years is the stock market can be real up and down, but the intention with this is to be someone that is investing in the stock market will be doing it long term. So that is why I used a 40-year stretch, because I think it's a lot more fair to use a 40-year number, and we'll stretch this out for the next 40 years. Let's say you're 25 years old, 30 years old like I am. We're going to see what makes money over the long term. So we're going to be using this number. This is dividends reinvested annual S&P 500 return. We're going to use 11.35%. We want to use the best number to give stocks their best outcome. If you see this, the S&P 500, this is over the last 5 years, you can see that it goes up and down a little bit here and there. If we only use numbers, if we selectively used it, it wouldn't be a fair argument. February 2020 to March 2020, I wonder what happened there. It was like a 40% drop or something. So that's why we're going to look at this long term. Day traders, I'm not including day trading at all. I think day trading is a whole nother exercise. That is gambling. That is not stock market investing. This is stock market investing for the long term. All right, so now that we have our average, we got 11.35%. That is going to be the return. So I used a compound interest calculator at the time. Let's say 25,000. Instead of putting in real estate, I would have had about 1,000 a month to put towards the stock market. And this allowed for 4 years. We're using that was 4 years ago, and I'm going to use just 12%. I'm going to give it a little boost and say that they made 12%. So in that 4-year stretch, I would have had about $104,000 in the stock market. Wow, what a big number. So 103, I think it was 103,572. And because that's the equity, that's the same thing as my net worth. That would have been all of my net worth. Let's see, 572. All right. And let's see. This is not right. So that's, I think, 414%. 414% return for stocks. That is huge. Now, that's not annualized. However, let's compare that with real estate. Now, real estate at that time, I bought a condo. I'm going to write that over here. So I bought a condo that I made roughly $70,000 on. That was a huge purchase, and it turned out real well. I got real lucky with appreciation, and I rented out for close to 2.5 years. Made something like 20 grand on roommate income. So it was about $70,000. I made a video on that. If you haven't seen it, you can check it out for all the details. And so that was my condo purchase. Then I also bought a fourplex, made something like $7,500 net. And then I also bought 2 flips in Cincinnati. Now, unfortunately, this lost me about 60 grand. I basically lost it all. I have not made a video about this, but yeah, I lost it all. So in this stretch of 4 years, you could look at stocks and go, man, Spencer, you should invest in stocks. But with the real estate, what ended up happening is I ended up putting about 60 grand from all the money accumulated and saving up from a job, net income. I had about $60,000 to put on the down payment for my house right now. So I have roughly $60,000 net worth. And now I lost something like $190,000 of equity in real estate. So at one point, this number was $250,000. It was trumping stock market. But because of real estate, because it's risky, I decided to take on risky ventures with flipping out of state 2,000 miles away. I lost a bunch, lost about what I'd estimate is 190 grand. So I'm down to $60,000. This is a percent too. So about 240% over the time. So stock market right now, in the last 4 years, the stock market would have made me significantly more money. But the reason why I'm in real estate is because I want to do this long term. Now, to be fair, we need to look at the next 5 years. This is how I'm going to plan out the next 5 years. I'm going to see how high the returns can be for real estate. So for the next 5 years, let's go back to our little calculator. Let's use 12% again, but this time our starting point is almost 104,000. But remember, with stock market, it's still only going to be 12,000 because that's about my net income. If I would have invested all my money into the stock market instead of real estate, I'd have about the same amount to invest each month would be 1,000, so 12,000 a year. We're going to do 5 years of growth, and we're going to stick to 12%, even though that's over the next 5 years it might be different. So anyway, 200. Let's just make it an easy $270,000. Now that's huge. Stocks starting at 104. Cash flow is still zero, but the equity, let's see, what was it? 269,000. We'll just call it 270,000. That's huge. Equity is the same as net worth. Total return is percent. 260%. That's huge. That's really nice. But the difference with real estate for me, and the reason why I'm all in, is because I bought what's called a house hack. I'm definitely gonna be making a course about this someday. But house hacking is essentially buying a house and renting out the rooms to roommates. And you may think it's crazy. Some of you may not want to do that. However, it is ridiculously profitable. So the starting cash, I don't know what I should put there, but the cash flow we're just going to do starting today over the next 5 years is going to be about $2,000 a month. However, because I don't have any living expenses, I would average, let's say, $700 a month for my living expenses out here in Vegas. It's going to be the real return, the real cash flow is about $2,700. It'll be $2,000 from roommates and $700 from my living expenses that are not caught. So my equity is starting at $60,000. But what's beautiful about real estate is you get a pay down of your mortgage every month. And so I put the amounts in this calculator on Zillow, and this will be my mortgage. So I haven't officially purchased the property yet. I'm under contract right now, and it'll be about a little over $1,000 for principal and interest. However, look at this number. That is the principal pay down. So if you look at the first year, it'll average about somewhere around $400 a month. We'll just use that number, even though the principal does go up. For sake of argument, we'll just use that $400 a month. So over the next 5 years, we'll be doing $400 a month. So that would be $400, about $4,800 a year times 5 would be 24,000, I think, if my math is correct, somewhere around there. And so my net worth would go up a lot because I would have the 60,000 in equity, but then also have the 24,000 in equity, but then the 60,000 from the original. But the cash flow is the big number. That is what I'm all about. We'll just assume 60,000 starting cash for the return to be accurate. So I don't really know what the number to put here. I don't know what the best number is, but either way, let's just assume that the 60,000 is the starting cash. 140% return. So it's still less than the stock market. However, the big thing for me is this number, the cash flow. I'm all about pursuing financial independence. I want to reach a point where I can leave my job and comfortably have my bills covered by real estate. And cash flow is zero for stock market. Now, I know people are going to jump on and argue that you have dividends and all that, but the point of this argument is to actually invest in a dividend. I think we chose, a dividend reinvested stock. So that's the number we're really using. The 8% is what you would get for the S&P 500. And if you dividends reinvested would be closer to 12%. So that's the number I'm using. So we're assuming a zero cash flow. The big thing with house hacking is you get this huge cash flow number every single month. And there's a lot of people in America that could live off $2,700 if you had all your bills paid. $2,000 a month of, it's not necessarily passive income, but it is a monthly income. And so that's the big number for me. And you get the equity pay down. So every month you're paying down that mortgage, which adds to your net worth. And you're still looking at this and go, wow, Spencer, you're an idiot. The stock market is significantly better. But keep in mind that in the stock market, when you look at this, your net worth and everything is tied to the asset. When you see a dip of 40%, you're not getting the cash flow. Now, you could say the same thing happens in real estate, that the housing market could crash and you lose a bunch of equity in your home. But understand that if a house was worth 300 and all of a sudden worth 200, it doesn't really matter because you're not selling. That's the same as the stock market. It hurts your net worth, but you don't really realize it until you sell. But understand this big number is the cash flow. That is what I'm after. The cash flow and the pay down of the principal on the mortgage. You're still making a lot of money regardless of the price of the asset. That's why I'm all about real estate. Now, I added this Cornelia Capital LLC. That's my real estate company. What I'm going to do is use this cash flow of $2,700. Now, right now, I have roughly about $5,000 a month every month coming in. That is my net income every month. 5,000. It's actually really close to about 6,000, but we're just going to use it 5,000 number to be even. So per year, That's about $60,000. So what I'm going to do is use that $60,000 to go flip houses. So my starting cash, we'll just say over a year, we'll use $60,000, and I'm probably going to flip and rehab. So when you go and rehab homes, you're adding a lot of value because you're generally going to buy the asset at a discounted rate so that you can rehab it and then still be in it roughly 75 to 80%. So let me give you an easy example. So one of my houses, if things wouldn't have gone so poorly, I bought it for $40,000. I bought it for $39,000. We'll just call it $40,000. Had rehab, about $70,000, and it was worth roughly $160,000 when it was done. And what you can do is when you purchase and rehab it for about $110,000, you could then, when it's done, you can go to the bank and get a loan that's 75% of $160,000. And so I can go to the bank and get a loan for about 75%. It's $120,000. Now the $120,000 pays off all of your purchase price and rehab from the previous loan and some points and closing costs. And then you have a property with 25% equity and it cash flows. So you might make, say $100 a month in cash flow, but your equity from this property, as an example, you now have $40,000 of equity and your net worth just went up by $40,000. Right? The total return is huge on that, 667%. But really, this number is infinite because what I just explained to you is where you purchase and rehab and you get out of that loan, you actually get all of your initial money back. And then you hold the asset, so it's an infinite return. Now, I'm not going to explain it in detail, but if you want more information on this, check out the BRRRR, BRRR method on BiggerPockets. That is the best place, the best resource for finding information on the BRRRR method. That is something you can look into. Now, that's kind of the strategy. Now, the reason why I bring up this, next 5 years is this is what I'm looking to do. And the purpose of this video is to show you what makes more money. Now, you could look at the stock market versus straight up house hacking, which is my form of real estate right now, and you can see stock market makes more money, and there's a lot of people out there that actually get significantly less. If you're playing the real estate game by the bank's rules, if you're going out and buying a property at retail prices, you're making like 6 to 8% returns, and you have the stress. I would actually argue that the stock market is actually better for you. But the point of this video, I want everyone to understand, is that everything matters about you and your life, and that's what I bring up here. So which is better? Well, the better investment strategy is whatever works best for you. For me, it's all about real estate. That's the game I think I can win long term, not the stock market. I don't feel like I have any advantages in the stock market. That's why I don't really play. So another thing you have to think about is stress. Stock market is mostly just set the money aside. If you're going to invest in the S&P 500 or invest in some low stress index funds, basically where you just set it and leave it for 40 years, then your stress is a 0 out of 10. That is great. 0 out of 10. No stress. You're making great returns on no stress. That is one way to invest. Real estate is way different. House hack, there were times where my stress was 10 out of 10. How much do you value your stress? Right now, I'm totally cool with stress. I'm young, single, no girlfriend, no kids, no wife. So I can handle the stress. So the returns, the crazy returns in cash flow are totally worth it for me, even though I have to deal with some moments of having a lot of stress. That is not for everyone. And that's why sometimes you may look at the stock market and regardless of how great the numbers are for real estate, regardless of how much money you can make, it's not worth it for you. So that's why it might be better for the stock market that's where you invest your money. You might not make great returns in real estate if that's not the game you want to play. So one thing you have to ask yourself is passive versus active income. Stock market is mostly passive. You're basically just setting it and forgetting it for 40 years. Hopefully you never have to even touch that money. That's the purpose of investing in the American economy, which is the stock market. Active income is what I'm after. I want a new job. I want to be a real estate investor. That is what I want to do full time for a long time. And so when I look at this, house hack, that's just a part of my portfolio. Once I get into flipping houses and rehabbing even more, I want that to be my job. So I want active income. I want the stress of 10 out of 10. I want to run a company. I want to manage people. I want to manage contractors. I have my real estate license up in Cincinnati, so I plan on selling houses. And so for me, my strategy is real estate. The returns on real estate will dwarf anything in the stock market, because what happens with the stock market is because it's reasonably safe long term, you're going to make a great return. You aren't really building a company. You're just kind of building an investment portfolio, which is totally great for some people. But for me, I want to be an active investor. I want a company, and you can build a company with real estate. A lot of people want to become entrepreneurs, start their own company. There's a lot of things that I'm not good at. There's a lot of different business ventures, if you will, online that I'm really honestly terrible at, but I still want to start my own company, and I feel like real estate's that way for me. And so my returns are going to be insanely different than a lot of other people. So for me, real estate trumps stocks. You can see right here, if the deals I start taking on or something along these lines, this is just an example, of course, but these were the deals I was buying. My first 2 flips went really poorly, and I lost a bunch of money, but I made a lot of mistakes. I'm going to correct them, and once I correct them, and moving forward into the future, the next 5 years, that's the purpose of this section right here, I'm going to be buying deals like this, and so I'm going to be making significantly more money, but that also comes with a lot more stress. So anyway, in conclusion, I think I covered it all. In my opinion, I think the real estate market, the real estate investing is significantly better than the stock market, but that is for me. That is my personal opinion. You may look at this and go, there's no way I would ever have roommates. I would never want to flip houses. I would never go through what you went through where you lost 60 grand. It's not worth it for me. I'll take the huge return in the stock market. And if that's the case, then that's best for you. I really hope you learned something in this video. That's the point of this channel, is always learn and always provide just a little bit different perspective on common debate topics. And so hope you enjoyed it. Thanks so much for watching.